So I'll be showing you how to analyze trade using Euros USD, and our multiple time frame is daily time frame, 1 hour time frame, and 5 minute time frame. So our 5 minute time frame is our entry time frame, right? So let's go straight to see the formula you are going to use anytime you want to trade. Okay, I decided to make it simple so that it will be easy for you to remember anytime you want to trade. So just have it in mind that you are making use of Mr. Life, right? The M stand for market structure. You know the markets that move in an uptrend is called bullish trend. The market that move in downtrend is called bearish trend. And you know what you are looking for when market is moving in an uptrend. Market is forming higher high and higher low, right, in an upward direction, while bearish is when market is forming lower high and lower low. So as simple as this thing is, many people do not know how to identify it on the chart. I'll be showing you how to do that in the range structure. This is very important. Our range structure is also the same thing as swing structure. Now looking at this is an uptrend, right? This is our swing high and this is our swing low. This is our range structure or swing structure. So it is in between this place and this place you are going to be looking for entry. And you know, according to the rules of trading, you enter into the market when the market reverses to 50 level, right? But most of the time, I used to tell you guys that you have to trade like a businessman. You buy when the price of things is low and you sell when the price of things is high. Now looking at this is the normal basic understanding of how markets move in an upward direction. It is generally believed that it will reverse to 50 level, but most of the time it may not happen like this, right? So what if the market is like this? This is a breakout. The market move like this. You can't call this complete pullback because it did not reverse to 50 level, it did not retrace to 50 level. Neither this one retrace to 50 level. So our range structure will be this, right? But what if the market still now move up like this and move like this? So this place will now be our swing high, while this place will be our swing low. So our range structure will be between here and here, not this place and not this place. So we wait for this price to reverse to 50 level before we start looking for entry. I believe you have the understanding of that. So before I proceed to liquidity sweep and interest zone, let me show you from the chart how to identify market structure and range structure. And if you want to do that, you do that on daily time frame. Daily time frame. So now look at this chart. What can you say about this chart? If I ask you what is the trend of this market presently, right? Now this is how you will do it. You can pick this part. Look at what market is doing previously. This is higher high. This is higher low. This is higher high. This is higher low. This is higher high. This is higher low. This is higher high because there's a break of structure around this place. There's a break of structure around this place. This is higher low. You can see that the higher low of this one is above this place. This is new higher high, right? And what happened? This higher high led to a breakout of this previous higher low. You can call this place change of character. But this market structure that I just identified is what we call external market structure. We also have what we call internal market structure. So you can see forming a new lower high. Let me wait here. Let me show you something here. If you pay attention very well, you can see that this is a break of structure. That place is a break of structure. This place also is a break of structure. This place is a break of structure, right? But pay attention now. You can see that in between that wave or this line, you can see their internal structure in between them. Their internal structure in between them. Because if you look at this place now, you can see that there is a wave in between them. Those waves in between them is what we call internal structure. But anytime you are identifying structure on a higher time frame, focus mainly on the external structure. Now this place is about what? Change of character, right? And what happened? What happened in the market? The market now moved from here to form a lower high, and break this level, to this place. Are you following? So we are expecting now that a new lower high should be formed, the market should move down. That is what we are expecting. So presently you can understand from this higher time frame that the market is already moving in a bearish direction. So what do you need to be looking at for opportunity to what? To sell. Can you see it is easy for you to even know what is going to happen in the market, right? So the next thing that we are going to do is to identify our range structure. So let me clear all this button. Let me clear all this. Okay. Now you know that this place is a break of structure, right? And this place is our what? Is our high. While this place is our what? Our low. But if you also pay attention, their internal structure here, this is high and this is low. This is an internal structure. This one, let me change the color. This place. So this is the recent high and recent low. But if you are looking at it as overall, right? These are in this place and this place. So I'm expecting this price to reverse to 50 level between this gap. So that is why sometimes we make use of Fibonacci, right? If you pick it from here, this is, look at this place. Okay. I believe you understand what I'm doing. I pick Fibonacci, right? Okay, just now. This place is the 50 level. This point, looking at this place is the 50 level of Fibonacci. It means that we are expecting this price to retrace back to this level before we start looking for what? Entry. So your range now is between this place and this place. And what we are expecting now is the price to come to this level, right? Then move downward. It's very simple. There's no need for you to complicate it. So from our strategy, we have identified market structure and range. So at lower time frame, we can look out for liquidity sweep for more confirmation of entry. Maybe the market is like this. Market is moving, for example, the market is moving in bearish trend, right? So if you see something like this is what we are seeing on higher time frame. If you now see something like this, liquidity sweep. This is an advantage for us. Then we now see another pattern B. That is where we can introduce our pattern A, B, and what? And C. Hope you guys get what I'm saying. So we are waiting for the price to come and sweep this place. Then we enter the market and the market will push down. So that is why I introduced liquidity sweep. For our interest zone, you can also identify your interest zone on daily time frame. I know that you guys will be asking me that why do we need Fibonacci retracement 50 level? If you identify a order block on higher time frame or an imbalance, now you know imbalance can be like this. Let's just say this is imbalance, right? Normally, let's just say this is the candle for the other block. So most of the time we used to divide it into half. So that's why we make use of Fibonacci, that we expect the price to come into that level, the middle level, before we place our entry. Then we now set our stop loss at the back of the order block. So, and most of the time inside a daily order block, you will see a 4-hour order block, you will see 1 hour order block. So it's just a way of minimizing our losses and to cash big profits, right? So when you are identifying your TP, use higher time frame to identify your TP, and when you are setting your stop loss, make use of lower time frame. So what of entry parameters? Our entry parameters is change of character at lower time frame. For example, this is an order block in higher time frame, or engulfing or imbalance that we identify on higher time frame. This is it. So the price has come here, but on lower time frame is now doing something like this, coming to upper direction, getting to this level. You know, we have used Fibonacci retracement to identify the middle of this order block. So when the price gets into this region and you see a change of character, right? You see a change of character, that is your confirmation that the market is about to change trend. Then you just wait for retracement, then you enter the market. Or you can look out for that our liquidity pattern A, B, and what? C. Then you enter the market. So I don't think this is hard to comprehend. Another thing you can make use of is trend lines. Now I said we shall assume that this is our zone, our daily order block zone, and we have identified 50-11%, and we have identified 50 level of that order block. So when price is now moving like this at lower time frame to that region, getting to this region, what you just need to make use of is a trend line. You wait for when the price will break the trend line. So when the price break the trend line, for example, maybe the price break the trend line like this, you will identify this level, and also you can spot out order block or imbalance from this level. So the price will, there's high tendency that the price can come and test that level. So that's where you will place your entry. Then the price will push down. So all this is not really hard, right? The only thing you just need to keep on doing is to modify your strategy. But I believe with this strategy alone, you can make a lot of money if you have proper trading psychology and proper risk management. So let's go straight to the chart and continue with the analysis. So you can see that this place now, this place is my area of interest. This is break of structure, right? The market has formed low, but this is our high. Now this is our range structure. Let me delete the Fibonacci since we have identified the 50 level so that my chart will be neat. Remove. Okay. Now this is break of structure. There's something. This break of structure. So let's look at it clearly. Let me zoom it out. See, I know for sure that the price will come to this level or that level. So because this place is our Fibonacci 50 level, and if you pay attention very well, right? Let me remove this. If you pay attention very well to this place, let's look at this place very well. Now, if you pay attention to this place very well, you can see that there is other block here. This is another block. This is another block. This is another block. There's also imbalance. This is also imbalance. From here to here is what? Imbalance. So we'll be waiting patiently for the price to come to this region before we look for opportunity to trade. Okay, now looking at this is what I'm expecting in this market. Personally, this is what I'm expecting. This is what I'm expecting. So most of the time I used to take maybe 60%. Know that this now, you know that this is daily time frame, so my stop loss will be around here. But that you predict this does not mean that market will obey it. So that is why you have to be in the market to look for confirmation, because it's possible that this price will get to that region also. Let me reduce this. Very good. So something like this. It's possible that the price can come here, consolidate to this region and break, right? And form a retest on it and keep on going. But personally, I'd be very happy if I see something like this. I'd be very happy if I see something like this. The price come here. Form liquidity sweep, enter again, give me B and C. I'll be very happy if I spot liquidity sweep at this region. So sometimes you may not see liquidity sweep here, you may see it at lower time frame, and sometimes it can appear. Do you get? Now, what are we going to do next? This is our signal, but that does not mean that market will respect it. But we know that there's high tendency that the market will reverse at this level. So let's go. The next you are going to do is to go to 1 hour time frame. This is 1 hour time frame. Can you see now that the daily order block, see what it is on what time frame? So that is why I used to modify my order block, and the way I do that is by using 50 level of Fibonacci. So then you'll see this is the 50 level. So I will wait for the price to get to that level. The question now is, how will I now enter this market when the market gets to this level? If you pay attention very well to the structure here, and don't be lazy to identify structure, it will enable you to understand what you are doing. Though we already have interest zone, but that does not mean that when the market gets there, it will buy, it will sell or buy. So you need to stay on the market to know what the market is doing. So looking at this place now, you're supposed to first go through the structure and know what is going on. So you can see that this is low, high, change of character, low, high, low, high, low, high, break of structure, high, low, high, low. And if you pay attention very well here, you can see a change of character here, change of character, low, high, like that. The market keep on moving in an upward direction. So what you will just do on this 1 hour time frame without stressing yourself is to make use of trend line, depending on how you want to analyze it. So if you want to draw the trend line, make sure you touch 2 or 3 lows, right? Now I'm only interested in the lows of this market. Okay. Now if you pay attention very well to what you are seeing, you will see our strategy playing out. You will see our, if you pay attention to the structure here, you will see our strategy pattern playing out many times here. Let me zoom it so that you will see. Look at this, please. Look at this, please. No, there's a range here, right? So we have liquidity sweep. We have liquidity sweep. That is our A. Breakout, form B, then form C. So we are expecting this C to break this level, to come and sweep this level, and it happened here. So as it happened, this is where I will have entered, like I'm just showing you. That is a signal. So even though I have a daily target, there are still some entry that I'm taking advantage of. So like this, I would have entered here, and this will have been my something like this. So let me type it. This is our A. This is our B. This is our C. So, and you see that the price came back to sweep that region. And if you also pay attention to this place, you'll be seeing other blocks. So I will start again from here. A, there's a breakout, look for B. So, but let's leave that aside. You can see clearly now that the trend line is towards up direction. But this direction, what you are seeing presently now, is just a daily retracement. Like, let's go back to daily. Let me show you what I. So what we are seeing now is just this retracement. We say it will retrace to this place, then come down like this. So that is what is happening presently in the market. So the place will be the place where we are targeting now is when the price will get to this region. that is when we'll be thinking of entering the market. And personally, from what I am seeing here, even from this higher time frame, from what I'm seeing on this higher time frame, you can see that there's a liquidity sweep here. This is our A, right? And there's inducement there. So this price is likely to sweep this level, then move downward. So let's go back to 1 hour. Please, you can spend time to listen to the video again. So you will keep on waiting until the price gets to this region. So something like this cannot happen. Something like this can happen. It will just keep on moving and moving and moving until it gets to this region. So let me reduce this thing. So it's possible that the stuff we get here give us something like this. Sweep liquidity, come like this, break structure, there's change of character. Then you wait for a retracement, you spot another order block at this region. So when you spot the order block from that region, for example, maybe you have an order block here, there's another block here on this 1 hour, for example, or imbalance, you will see now go to maybe 5 minutes to place your entry. You will now wait for the price to get to this order block. You can also divide this order block to 50 level. That is how to trade. It's not really hard. You can know where the markets will move from daily time frame, right? Then just wait patiently for the market to move to that region. But because I know that this place is retracement, let me reduce the stuff. Okay. Because I know that this region is retracement and it is bullish, and I'm expecting it to get to the daily order block or imbalance, I can also be taking advantage of this, right? I can be trading this like this till it gets to that zone of order block. I'll be looking for buy opportunity. That is how to trade. So the main thing is that we just need to keep on learning, keep on practicing, keep on analyzing trade. But anytime you guys want to analyze trade, follow all these steps that I show you guys.